Next question. What happens to my investments outside of the US? Yes. Now that is the $1 million question. Literally, it could be $1 million question. And that's another area of practice for us, which is pre-immigration planning. So people who are moving to the US, whether it be to take their company to the US, or they may be a senior level employee with a multinational and they get an expat assignment in the US, whatever the case may be, you're moving to the US and you will be under the full weight of the US tax system. So from an income perspective, you would be treated the same as any other American resident who's spending enough time in the US to trigger US income taxes. You will be subject to taxes on your worldwide income. Let me repeat that. You move to the US and you reside in the US, you will be subject to taxes on your worldwide income. I've seen some perhaps uninformed presenters talk about, if you get an L visa or whatever, you don't need to be. No. The immigration law is separate from tax law. You end up in the US as a lawful permanent resident, so that's Section 7701, or you're just spending time enough on US soil to trigger what we call substantial presence, again, under Section 7701. Doesn't matter what visa you're in the US with. Doesn't matter if you're in the US illegally. The point is that you are subject to taxes on your worldwide income. You will be subject to taxes on your worldwide income. So you fortunately in Singapore, one of the reasons that we're all there is because it's a relatively low tax jurisdiction. So capital gains are tax free, dividends are tax free. In the US, those are subject to taxes and you will be taxed just like any other resident. So what we recommend you do is sit with someone who understands the international side of the US tax code. And what we would do is go through their assets line by line. So typically they come with a spreadsheet. Okay, so these are my investments. I have shares in this other company in Singapore. I have shares in a company in Malaysia and Indonesia. I have investments in iFast. I have investments in Unitrust. I have investments in mutual funds in Hong Kong. I have a rental property. I have a few condos in Singapore that I'm renting out. Whatever it is, we're going to list them all out. And we're going to go through line by line item by line item, what will be the US tax consequences once you enter the US and you spend enough time there to be tax resident. So we walk through all of that with you. And sometimes there may be ways of mitigating the tax impact, but other times no. So if there is a way where there may be a planning opportunity to either reduce the tax burden or eliminate it completely, we can have that conversation. Otherwise, you just need to be prepared to pay taxes. So the US taxes on your worldwide income, and you need to declare your worldwide financial assets. So any financial account, including your CPF or MPF, depending on which other jurisdictions you're exposed to, whatever financial accounts you may have outside of the US will be subject to US disclosure. It doesn't mean that it's going to be taxed, but often it is. But it will be subject to US disclosure. So your OCBC, UOB bank accounts, everything that's financial outside of the US will be subject to disclosure. And any returns on that investment will be taxed accordingly. So hope that helps.
Please subscribe, like, share, and comment below. Our books and upcoming events are available at htj.tax. Email us at help@htj.tax to engage us, to advise on international tax or business matters.